to the Delaware Mortgage Rate Weekly Mortgage Market Update for the week of May 12, 2014. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you an update. Well, last week, Delaware mortgage rates hit the lowest they've been since October 2013. If you look at the bond chart on the screen, you can see on last Thursday, that was when the bond hit the peak it hadn't seen since October 2013. So we've seen some mortgage rates have been moving low for the last 3 weeks, so that's been great news. Now, mortgage bonds have hit a high, so interest rates have hit a low we haven't seen since October. So we're going to recommend locking in your Delaware mortgage rate. Take advantage of this nice run-up in the bond market. Lock it in and keep it moving. So let's look at what's going on. Why are interest rates moving lower? Well, we've been predicting interest rates should move higher throughout the year because the Federal Reserve is reducing their bond buying program. They were at $85 billion a month in December. Now they just moved in May to only buying $55 billion. Now that should have moved rates up, but as the Fed's been pulling back on buying, the supply has been pulling back. Mortgage originations are down 55% from last year, so we haven't seen that supply-demand effect. So as the demand's been waning, so has the supply. But it will catch up, so we do expect rates to move higher as the year goes on, so that's why we're telling you to take advantage of the rates now. So what's been keeping the rates low besides the lack of mortgage supply? Well, we've had, first one is tensions overseas, Ukraine, Russia fighting on over there. That triggers what's called the safe haven trade. So when people get nervous, they pull money out of the stock market, put it into the bond market. The other issue is the stock market rally has fizzled out and pulled back a little, moving money into the bonds. So that short-term effect has moved mortgage rates to lows we haven't seen since October. So take advantage of these rates right now. Get under contract or get your refinance in. Okay, in economic news, we also saw Federal Chair Janet Yellen was on Capitol Hill on Thursday. She testified on the state of the U.S. economy. And for the most part, she was upbeat except for housing. The housing sector gives her cause for concern. Mrs. Yellen said the housing sector has been recovering since 2011, but it's been a disappointment so far this year. The recent flattening out in housing activity could prove more protracted than currently expected, resulting in an easing in the pace of recovery. So, we saw on Thursday the initial weekly jobless claims come out from the Labor Department. Claims dropped by 26,000 to 319,000 claims. So that's, if you look at the chart there, that's a big drop from 345,000 last week. So falling jobless claims, good sign for the labor market. Now in the housing news, CoreLogic reported that the home price index for March 2014 was up 11.13% from March 2013 to March 2014. That is an increase of 1.4% from February to March. Now, this is down from 11.81% from February to February. So that is supporting the view that housing is doing good, but the appreciation from year over year is beginning to decline. Still a good time to buy. You're still going to see homes appreciate, but just not as the fast pace we've seen over the last 2 years. And then Realty Track reported that cash buyers of residential properties in the first quarter of 2014 was 43% of all sales. That's more than double the cash buyers in the first quarter of 2013, which was only 19%. So the high percentage of cash buyers could show that there's a soft underbelly to the housing market recovery. A high percentage of cash buyers is not sustainable, and it shows that there are more investors than homeowners. And we can see that by the home ownership rate has declined. It's fallen to 64.8% of people own their homes in the first quarter of 2014, which is a 19-year low. Now, some people see this as a bad sign, but we see this as an opportunity. That means we've had more renters now than we've had in a long time, and we've got the younger generation living with their parents. We've got a lot of renters, so we see some pent-up demand for housing. So the number of renters is the highest we've seen since 1995, but from 1995 to 2006, we had a good run in the real estate market. So we see the pent-up demand in rentals slowly trickling into the housing market. So we see that as a good sign, so let's look for that. In the local news, the next free first-time homebuyer seminar is in Newark this Saturday, May 17th, from 10 a.m. to noon at the Christiana Hilton Hotel. And then the next one in Dover is on June 14th. That's at the Holiday Inn in Dover from 10 a.m. to noon. It's a Saturday. You can register for either one of those events by giving us a call in the office 302-703-0727 or online www.delawarehomebuyerseminar.com. Look forward to seeing you guys next week.